When markets crash, every second matters. Prices collapse. Traders scream. Screens flash red. Billions evaporate in minutes. This isn't a movie. It's real. Today you'll see inside the chaos of a full-blown market crash. What happens behind the headlines, how traders fight to survive, and where real profits hide inside the panic. The anatomy of a crash. A crash isn't a single event. It's a chain reaction. First, a catalyst triggers fear. Bad earnings, war, or a fund liquidation. Liquidity disappears. Bid-ask spreads widen. Market makers step back. Panic selling snowballs. Margin calls force liquidations. High-frequency algorithms magnify every move, triggering stop-loss waves. The speed increases as global fear spreads. Every tick triggers new waves of forced selling. Professionals call it a liquidity vacuum. Inside the trading floor, seconds of survival. When the crash hits, traders move fast. Phones light up. Clients demand exits. Risk desks issue cut orders instantly. Positions are dumped to cut exposure. Algorithms front-run every move. Volatility spikes. Spreads widen to extremes. Flash crashes hit as buyers vanish. The trading floor isn't calm, it's controlled violence. Veteran traders stay sharp. Emotions kill. Discipline saves. The retail bloodbath. While pros use system triggers, retail traders freeze. Limit orders fail to fill. Spreads widen beyond stop levels. Broker outages spike under volume. Margin calls force sales at the worst prices. Retail accounts get wiped out. Not from one trade, from being unprepared for extreme volatility. The opportunity inside the panic. This is where Market Havoc separates itself. Crashes create windows for calculated aggression. Volatility creates mispricings. Panic selling pushes quality assets far below value. Dislocations between futures, ETFs, and assets widen. Options premiums explode, creating asymmetric trades. Smart money doesn't panic. They sharpen their edge. Key tactical moves during a crash. To survive and profit during market chaos, you need a plan. 1. Pre-position cash. Liquidity is a fence. 2. Know your targets. Have preset buy zones. 3. Scale in. Never go full size, catching a falling knife. 4. Use limit orders. Spread control is everything. 5. Control size. Volatility cuts both ways. 6. Watch relative strength. Leaders bounce first when selling exhausts. The post-crash aftershock. The biggest moves often follow the panic. Short covering sparks huge rallies. Rebalancing shifts capital fast. Central banks inject liquidity. Institutions quietly accumulate. Those who stayed liquid strike now. The psychological warfare. Surviving crashes is mental. Fear feeds fear. Anchoring to old prices kills decisions. Regret, hesitation, and revenge trades magnify losses. Professionals detach emotionally. They follow rules. You don't rise by hoping. You rise by executing. Market Havoc, rules of crash, survival. Protect capital first. Size small, trade precise. Never chase the first panic. Plan before the crash hits. Accept you won't catch the exact bottom. Profit from chaos. Crashes never stop. Fear always creates volatility. But inside that chaos sits the greatest wealth transfer for those prepared. Market Havoc exists to turn chaos into clarity, to help you see what others fear, to give you frameworks that keep you alive when markets melt. When others panic, we profit from chaos. Subscribe now. Inside Market Havoc, we break down real crashes, actionable trade setups, and pro-level tactics to help you survive and thrive. This is how professionals operate inside real volatility. Stay sharp. Stay liquid. Stay dangerous.